Hello everyone, welcome to the Market First Principles community again. At starting, we have seen 3 to 4 clips. In some clips, we have seen market is coming down or crashing and people are getting panic, and in some clips market is going up. So if you regularly follow the market or follow the news, you must have heard about the stock that has been doubled or tripled in few years, and you must also have heard about the stock that become wealth killer for the investors and become penny stock in few years. So in this market basics series, before proceeding to charts and indicators and other factors through which we will be creating our trading strategy or the trading system, we first understand why this price is moving for a stock or for any securities which is listed on stock exchanges. Here I have opened Nifty 1 minute chart for illustration purpose only. If you will open any chart, then you will see the x-axis and this y-axis. This x-axis will be showing time and this y-axis will be showing the prices, and this technical chart is basically a representation of price with time. So for each point there is a transaction done between the buyers and sellers at this time. So this price and time chart is plotted like this. I have taken these discrete values, but per second millions of orders are getting placed, so the chart will be continuous. So now we can conclude, if the transaction between buyer and sellers are at lower prices than current price, the price will come down. If the transaction is getting executed on the higher prices than the current price, the price will go up. But now the question comes, why the transaction between buyer and seller will be executed on the lower price than the current price, or higher price than the current price, to lead the chart to go down or lead the chart to go up. To understand this, let's go to our whiteboard and consider a real marketplace where some sellers are selling their products and buyers are buying at their requirement. So in this marketplace, just consider a seller came to this marketplace with his product, commodity or service, and he want to sell his product at 100 rupees, but no buyer is interested to buy his product or service at this price. Why? There is a possibility that this particular product or service is abundant in the market, so the demand of this particular product is very low. What will this seller do in such case? In that situation,
I am demanding a lower price.
Seller will be required to lower his ask or offer price. Initially, he was offering his product at rupees 100, but At this price, no buyer was interested. So he dropped his ask price to 90 rupees, and see, still no buyer is interested. So he further dropped his price at 80 rupees, and we'll see if buyers are interested at this price or not. So he will keep dropping his ask price until sufficient number of buyers will be interested on buying this product at this particular price. Let's take another example. We are the buyers and we went to marketplace to buy some product, but that product is in demand and the availability at the market is low, and that product we need. What we can do in such case? We must buy that product. The seller will increase the price
Price is going up. You need to pay more.
until the buyers are agreed to pay for that product. So from the last two examples we may conclude, if sellers and buyers are buying and selling at the fixed price, price will not go anywhere. But if the demand is low and the supply is high, generally seller will revise their ask or offer price to lower, and transaction will get happen in lower prices, and the price will go down for the product or the service. But if demand is high and supply is less, generally sellers will ask more prices and buyer will buy on higher prices and price will go up. So now we have understood the concept of supply and demand in our regular market. The same concept is applicable to stock market also. So for the illustration purpose, I have logged in my Zerodha Kite account, and here I am just going to my watch list and I will add one security, for example Reliance here, and we will see the market depth of that particular security for the same concept. So just I am typing Reliance here and adding this to my watch list. So Reliance is now added to my watch list. Now by clicking this button, market depth for Reliance will be visible here. So let me zoom this first. So this is the market depth for Reliance security. So what we can see here, it is written as bid, this is written as offer. Alternatively we will call this ask. this section is for buyers and this section is for sellers. So what will you notice in live market? If demand is high and supply is less, then the sellers are generally increase their offer or ask prices, and buyers are agreeing to buy those elevated prices to match the seller prices, and price will go up. In another case where supply is high and demand is less, then these prices offer or ask will generally coming down by the sellers, and this bid price will come down to match the prices offered by sellers, and the stock price will come down. You can watch in real market these prices and you will understand this concept in live market better, as market is closed at present, so it is showing as 00. Upon clicking this arrow, we may see market depth up to 20 places. So if we define the demand and supply, then what can be the definition for demand zone? So demand zone or level will be that level where buyers starts dominating the sellers and push the price higher. But why in that particular zone buyer will be interested again to buy? Any reason? It may be a fundamental reason or a technical reason or any sentimental news or story. In opposite case, what is supply zone or level? Where sellers starts dominating the buyers and push the price down. But why at particular zone or level sellers will be interested? Again, for any reason. It may be a fundamental or technical or any sentimental news based. So if price is going up, there will be a point where sellers will be dominating the buyers and price will start coming down again. Here buyers will be dominating and price will go up. So this one and this one are the zones. This is a supply and this is a demand zones. So let's discuss the same demand and supply concept. Suppose price is going up previously and now the price is making a range. So this phase is basically called distribution. Until this level, the demand was high and supply was less. But at this zone, the buyer got weak and sellers are started dominating. So after the distribution phase, generally price will come down. Here sellers are stronger than the buyers. But suppose in another case, if price is coming down and it started forming a range. Here supply was high and demand was low, but at this zone sellers got weak and buyers started pushing the price up. So this zone is basically called as accumulation, and after accumulation price generally changes from downtrend to uptrend. This both concept, distribution and accumulation, where buyers and sellers are in equal strength. So if a buyer wins, price started moving uptrend. If seller wins, then price will start to moving in downtrend. So till now we have already discussed why price is moving. This is moving just because the demand created by buyers and supply created by the sellers. But what are the driving factor for this demand generation, or the driving factor for this supply generation? Basically, for the driving factors for both of these may be fundamental or technical or sentimental. News stories. Let's discuss one by one. So the driving factors for demand generation is, first let's discuss the fundamental reasons. So there are many fundamental investors who are tracking good securities to buy. Their fundamental are up to the mark as per their analysis. So what are those metrics? What they are tracking is basically, some of them we can list down here. The first one is return on equity. The second one is return on capital, low debt, good management, no corporate governance issues, cash flow, free cash flow, etc. So if a particular stock where fundamentals are intact but the price is coming down, these investors are waiting for a good valuation to enter. So for the valuation, mostly P ratio or PEG ratio they use. So if they find the valuation is good, then they accumulate here. And for the supply generation, if we discuss these fundamental reasons, then the opposite, what creates demand, is basically responsible for supply generation. So if a security is not able to deliver these returns on equity and on capital, or the debt increased significantly after the quarterly result, or there is some management or corporate governance issue, or the cash flow is impacted, or the valuation is too high, then this will create fundamentally the reason for supply generation. So let's discuss the second driving factor for this demand and supply generation, which is technical reasons. So we have multiple ways of participating in market using technical analysis. So there are scalpers, there are intraday traders, there are swing traders, there are positional traders, and there are technical investors as well. So they are basically using technical analysis to buy or sell any security. As we know, in technical analysis, There are multiple ways to participate. Some people use support and resistances. Some use Elliott wave. Some use momentum based indicators, and some also use pure price action to participate. So these technical reasons also responsible for this demand and supply generation. Now let's discuss the third driving force for this supply and demand generation, which is sentimental stories news. So if we discuss this third driver for the supply and demand generation, we may see for the reasons for demand generation. If some news comes out where the particular company is expanding or acquired other businesses or got some big contract, merge, demerge, etc. will be responsible for these demand generation. And what are the factors which may contribute in supply generation? Suppose overnight there is a news of some governance issues into the company, or some key person from the board resigned, or some big news comes out regarding forging, etc. from the company. This will lead to a supply generation of particular security. This is not limited to what I have written, because there are multiple things that can affect a company, and the price of that company may impact a big way by this news or sentiments. For example, suppose we are now seeing the impact of Donald Trump. The tariff issues, we have been impacted. Suppose in budget for a particular company or sector, some scheme is launched, it will impact that sector or security in positive way. So there are so many possibilities with this driving factor. So broadly, these are the reasons that affect the demand supply of any security and leading to the price change of a security. So now I may assume you are now aware why the stock prices go up and down